Hey guys, welcome back to another episode of Market Mastery. You're here with your host, Trader Dax, aka Kyle, and I've also got today a very special episode. The man, the myth, the legend himself, the founder of the Crypto Paradox Group, Roman. So thanks a lot for joining us today, mate.
G'day, mate. How are you?
So in today's episode, guys, we noticed a lot of people talking about the bottoms, potentially being in the stock market, potentially being in crypto. We're quite well renowned for, picking the bottom very, very nicely in 2019. And Roman also selling the top in 2017 as well. They're very well documented in our groups. If you want to go and have a look at that. So we wanted to basically come out and put this video out there to help people identify and how to pick the bottom when it's actually in. And the best ways to sort of look to accumulate in the range. So you're trading with the larger time frame players and the whales who control the market, and not against them, or not getting in at the top of the ranges and then getting suckered out, capitulating at the bottom before it reverses and goes back up to the range highs, right? Which is a problem. A lot of people get chopped out usually during accumulation phases, because that's the whole point of an accumulation phase. The larger players in the market, you could call them the covert operators if you want to follow the Wyckoff theories. That's what they do so they can enter into the market. So we want to give you guys just a little bit of a strategy of what we're looking at the moment, where we think the bottom's most likely to be. Are we currently bottoming right now? And all the other questions that probably everybody has want to get answered about the bottom and how to find it. So over to you, Roman. Your thoughts?
G'day, dude. I don't know if we're bottomed yet. We're definitely putting in signs of bottom behavior at the
Mm-hmm.
moment. A lot of the macro indicators are all suggesting the bottom is already in. Um, it's a unique cycle because we've only fallen what's it from the top to the bottom. We've got roughly 74%. Usually they're
Mm-hmm.
in the 80s to closer to 90% for the pullback. So we also had a double top in this market cycle, which is a first as well. So the market cycle could very well be changing, the bottom could very well be in. I'm already positioned in. I actually got quite a nice entry. Just
Yep.
from what we cover in market mastery, etc., of how to actually look for bottoms.
Definitely. That was a while ago. Your entry, either is that what you were talking about when you put up that big post in Paradox and you
Yeah. So I essentially told people that a lot of the macro is saying that the bottom could well be here, already in, and that's where I had entered based on my systematic approach to trading.
Yep.
So far, when that top came in I think it was like mid August, with a couple of SFPs in a row into a really key level of supply. I hedged my position there, and I've since closed that hedge once that falling wedge that you put a nice post up on broke out to the upside. So
Mm-hmm.
at the moment, just waiting. So at the moment, got long exposure and just being patient. These things can take months to play out, so no rush to make any
100%.
big moves.
Which is exactly what we saw in 2019. That bottom took, what was it, 3.5 months, I think it was. We'll go and have a look at it in a bit anyway, but I think it was around that 3 to 4 months.
Yeah.
And there was a lot of chop, right? We didn't get the typical spring that you usually get, which is for you guys watching at home, the fake out to the downside and then reclaim of the range. We had a little bit of a different one. The previous cycle bottom played out very much like that, so we sort of had the chop like this. Then right at the end, you have the big fake out SFP of the rest of the range, and then it came back for that test, chopped around like this, and then took off. And that range took about a whole year, I'm pretty sure, to play
Yeah.
out.
Yeah.
From memory, it was around like 50 weeks or something. But we'll go and have a quick look at that as well, and we'll show you the differences between those two. And I might even pull up the different Wyckoff schematics to have a look at as well, which is what we showed everybody in 2019 as well. And some people managed to catch that bottom with us, and unfortunately others didn't, and they ended up buying a lot higher. It sort of looks like we're at the beginning of an accumulation range at the moment. And, this also potentially could just be a double bottom, but I mean, I'm not 100% sold that this is just going to be a double bottom and then it just breaks out and launches like that. I mean, it could, and we just have to wait and see what the market gives us. But I think more than likely, we could probably come up and even test this P block and then have a pullback from there back to the range low. Is most likely, if this is the accumulation range, I think that's more likely to happen than this just being a double bottom and then we take off from there. But generally, guys, when we are sort of spotting and looking for bottoms, we want to see, obviously high time frame, really key levels. So if we look back over the history of Bitcoin, it doesn't usually come back to test the previous all-time high. Of course, we didn't do that in this market cycle. I have to change the chart, actually. We'll go and have a look at the index chart so we can get the rest of the price action. Right. So this market cycle obviously stayed a lot higher, but it did come back, as you can see here, to a pretty nice and important level. So the previous all-time high was down at 1.2K, right? So I'm just going to put a line through on that. We sat a little bit above this P block through here, as you can see, which was a key level. A lot of people were expecting the price to come back to 3K, but it managed to just hover above that, and a lot of people got caught out. And then you can see we sort of came back. It sort of looks a little bit similar to what we've got here, actually, with a bit of a double bottom action, but the close doesn't really come back below the initial sell-off, and it just grinds higher and higher and higher. And as you can see, that took 130 days before we got the breakout, which was also a weekly P block on that breakout. And then we sort of got that uptrend from there to retest previous key structures through here. But we won't talk about that too much for right now. So there was a fairly big gap, and a lot of people were saying it's going to come back to 1K, etc. And usually, what we find when we come to bottoms is people are most bearish at the bottom. And I sort of feel like there's there's a lot of people at the moment very bearish in the market for stocks, economy, and also crypto. Do you reckon that's true at the moment, Roman?
I completely agree. I think the sentiment is wild at the moment, for good reason. World War III is on the brink. But at the same time, it's just a war between two countries and between Russia and Ukraine for the most part. And if you think of like the Middle East for the last 20 years, that's just been the US and the Middle East for the most part. And stocks have been flying during that. Crypto has been flying during that. This is no different. So I think people are extremely bearish, and that usually leads to nice rallies.
100%, right?
Yeah.
So let's just quickly take a look at this previous trading range through here, and so we can give people just a bit of an idea of how bottoms sort of look and feel. So this is obviously a weekly chart. We're going to go down to the daily to check that out. You're going to have to scroll back to it because you get a little bit of a better picture on the daily time frame. So what usually happens is you get this sort of area here, which is called the preliminary support. And that's where price finds a really nice key level. And then it looks like it puts in a potential bottom, fakes out again. You can see there's a nice SFP of this level through here. And also we're coming back up for a bearish retest of this level here, right? So obviously, you see a daily candle like that. That is a very nice opportunity to short and look for the market to roll over and come back down. So this is going to be in really key, important price action for later on when we start to move forward. And as you can see, we come back up and this ends up putting in the level that's actually the range high. So a lot of the time that will happen with what you call a preliminary support, ends up being the range high. And you can see that becomes a really important level through here, and also here. And then again, it ends up acting as support. When we flip back, we break out above the range, ends up holding a support through here. So we always want to be looking, okay, where are the really key, strong levels of resistance in this trading range? And then what does price do after it breaks out of that? And this is the same, guys, with Bitcoin and also with altcoins. You'll see a lot of altcoins have really similar price action structure to this. If you want to go back and look at Ethereum or ADA, are really good examples. But most altcoins, when we went through the 2018-19 bear markets, Bitcoin did have a breakout and a rally. Most altcoins didn't really do that. They just chopped sideways for a long time. Also looking at the altcoin Bitcoin markets as well, and you'll see these really nice, beautiful accumulation ranges, chopping everybody out sideways. Some of them have a really big capitulation wick like this, chop everybody out. And then they break out above the range high and they flip through this period here is where you want to be buying in on those altcoins through here, right? Another really good trick as well, when you do identify, okay, I think that this is the range that is going to be the accumulation range before we move up next. So let's just say that we're like in this period through here and we can't see everything else to the side of that. You can just get out. Sorry, where is this tool? I always lose this one.
What are you looking for?
The channel. Where is it?
Top, where the line is. Yeah, that one down the bottom there.
Oh, here we go. Parallel channels, right? And you can just drag that along. Change the colors because we're there. We go. And so you just go from range high. I'll draw it again for you guys. So you start at the top of the range and then you go to the bottom of the range, right? And drag it across your page. Then you drag it down to the bottom, right? And that sort of will give you your range. And then one of the tricks to just stop you from like chasing and trying to buy like a breakout or something like that, or getting in at the top of the range, you want to always try and limit your buys to being below the 50% of the current range that we're in. And that will just help you from, panic buying, breakouts and stuff like that. And then as the market sort of rolls over, panic selling, trying to get out. And then the market reverses and goes back up to the range high and you're buying back in. And then, you sell out as it dumps again, because you got to remember the bigger players in the market are literally trying to manipulate you to buy in at the top of the range and then sell back to them at the bottom of the range, because they're selling up here and they're buying back at the bottom of the range. So try to remember that whenever you're looking at trading a range, try and always limit yourself to only ever buying or entering when you're at the bottom 50%, right? Or if you have like a really nice setup like this, which is a really nice support and resistance flip. So that's after we've broken out of the range, we've had a sign of strength, and then we come back to the top of the range, we find that support. That's where you want to be entering for the next move up, right? So either below the 50% of the range through here, right? Or on the breakout, the best buying opportunities. Because if it rolls over, right, and you get stopped out, or you panic sell below the range, or even if it does go lower, right? And we'll show you some examples of what could happen on actual Bitcoin's current price action. You're only getting stopped out for a much smaller amount than what you would be if you were trying to enter up here. Because yes, we always say, okay, limit to when you're entering to, per trade to only do 1%. But let's be honest, when we're more in an investor's mindset for long-term multi-cycle plays, we're actually entering in a lot more than 1% risk, because, you're transferring, well, the way that I trade anyway, I'm transferring across my capital for holdings from being in USD back into Bitcoin for the next bull cycle, right? So it actually opens myself up to quite a large amount of risk. So I want to be trying to get in and accumulate near the bottom of the range. And then I would be looking to short if it breaks down, and I would take that short off if it goes back into the range. So I'm covered to the downside. And then if it comes back into a position, I take the short off. So I'm taking minimal loss. But if it does crash, I'm covered. So I think that's the sort of mindset that you want to have when you're entering into the range. Do you have any thoughts on that, Roman?
I go for like, if I steal the screen for a sec, and I'll bring up a chart of what you're looking at. How do I do this? One sec. I think I need. Here we go. Advanced portion. Cool. We'll go back to where you were. We need to use ticker ETC USD Bitstamp. There's a replay tool. Cool. Why is it not going quicker? Right, so this is that range.
Yep.
I try to work off like a level, so in the same way of you, I've got that range. So I'll work off the candle bodies like this. This is, for me, this is a pullback against trend that creates
Mhm.
my range from this point onwards. These are deviations and deviations. And then at the same time as you've got that really key level of support and resistance. So you're looking to flip that later. Just line that up to the equal levels. And then on the lower time frames, you're just treating those levels with respect. So while I'm trading on the low time frames, right, when it comes and sweeps that daily level from back here on the 4 hour like this, you can just keep trading. So these are my entries I'm looking for, sweeping in the low of the range, then closing back above, and especially if you can close back above, like I call them demand candles, essentially the last candle of the range, of the swing, sorry, and when it comes back to it, if you do that kind of price action off it while deviating slightly below that daily level, you can start accumulating throughout these periods here, right? And then you've got easy invalidation as well. If you start closing underneath here, then you can remove that position. And then it's the same thing all the way across. All right. So try to use the high time frame like what you did on the daily or the weekly and draw those really key levels. So on the weekly is where we drew this one in. But when we go down to the 4 hour, it's those really key levels on the weekly that would given us two by the weekly that we can utilize on say the 4 hour. Right. So a reclaim of that level here, you could get long with your long tool, say here, or buy some spot. For instance, if you wanted a DCA in, it's a great time to DCA. Give your invalidation point either below this last impulse candle or below the range even. Right, and then just if you're a DCA, I'd recommend DCAing and every time you wick below and close back above like this. And then by the end of it, you have like a really, really healthy entry, a really low average of the lower the range as well. You look at current price, it's the same approach as what I've been doing for the most part. It's been quite a lot easier this time actually. So we've got this key level here I'm watching as well. And then that level here as well on the weekly. We come down to the daily. We can see whenever we go below these levels and reclaim them, you get really nice, the same logic, that same approach, right? You get to enjoy all these upsides. All right, so a 4 hour close above, you can have your stops back below the lows, get to enjoy the upside. The same logic over and over, right? So you're just keeping it really, really simple, like you were mentioning when you've got that range, the parallel range. You always want to be buying in the lower half of it, ideally. So your risk to reward, your risk is very little when you're buying down here, and your risk is very little when you're shorting up here or offloading, right? Because if you sell these SFPs or hedge here, and price maybe does this and then reclaims and pushes off, you're only going to lose a little bit of your percent if you get stopped out and you're wrong here, right? But if you're short from here and then price does this and you weren't managing risk or your invalidation wasn't until up here, then you lose much greater. If it's portfolio wide anyway, trading usually you have that risk defined prior. It's essentially just keep it as methodical as possible. Something that had me really interested this week, or last week, sorry, this week just closed, was this is that daily level here, the SFP reclaim, that same logic, right? So that's the daily level, had a daily close above with that falling wedge and huge divergence into this level across indicators. And then we get that like that was pretty much destined to happen. Like that was really obvious it was going to play out like that.
Yeah, I thought so too.
Really key divergence into a really key level. Something I was watching as well that maybe get a bit excited and maybe go a bit bigger size than I normally would, just because of my system said was when you actually have structure in the indicators, like say an oscillator, this is RSI, when you have a falling wedge on price into a key level, right, with a pattern, reversal pattern on the indicator itself,
Yeah,
huge heads up. The indicator always will print this before price does its thing. But for me, that was a huge heads up. So
definitely.
so far it's looking good, and we're in bottom behavior. But this is my big concern. This is my cheat sheet I've been watching all year. And essentially, we just keep bouncing off these 2 points over here. So this is the week. Sorry, this is 1 point here, 1 point here, 1 point here that creates the channel. Right. So we bounced off the channel here perfectly, up here and up here. And now we've also breached this trend. So you were mentioning Wyckoff before. One of the key parts of Wyckoff is when they move from phase A to B or from B to C, usually you breach trends like that as well and then go into a sideways range for a period. My concern is though that the previous markets, based on time, ended here and here. So this was their bottom was found here somewhere, but
Mm-hmm.
yeah, the bottom was found at this point in time based on price and time.
And
As in the market,
that's
hey,
pretty much exactly the midterm elections for the US. Exactly that
interesting,
day.
interesting. And then the market cycle before that ended up here, right? So that's if we were to overlap the two different market cycles to this one, that's where they ended up. So I'm just paying attention to this as well, that we can come lower. And this line here is when I think a bunch of new miners come out as well, new technology miners,
Okay.
which is also cross-referencing this bottom here. So just concerned, but at the same time, I stay as systematic as possible, right? You want to be buying these lows because just in case this is the bottom, you don't want to have this. No, it's going to 14K. I'm only going to buy at 14K. You can't convince me otherwise because you can make
100%.
profit in all of these and then risk off if you have to, and then buy down here if you have to. But you're better off just if you're active in the market anyway, just constantly having that systematic approach. For me, it's just those level reclaims just to simplify the hell out of it. Just level reclaims like that.
100%. And I think a lot of it, is this the actual accumulation range that we're in at the moment? I think a lot of it actually is going to come down to what the stock market does, right? And in regards to the stock market, we actually have some very important information coming out and speeches from Fed Chair Jerome Powell on Tuesday morning, which is the 13th of September. That data is released at 8:30 a.m. and he will usually speak shortly after that. Data is released. I think they usually give like 15 minutes to half an hour, so he'll probably come on at 9 o'clock, and then the market opens at 9:30 to fully digest the data dump and his speech as well, which is quite important, right? So if you
Yep.
could just put a Fibonacci on that as well, Roman, to just go from the bottom,
Or which
the
which low?
yeah,
This
from the
low?
low to the recent high, you can see that it came back and it's like a perfect retest of 0.618, right? And as Roman just draw in as well, we're sort of just bearish retesting the first level of resistance. So it's going to be very important opening Monday and Tuesday in the market to see what happens. At the moment, like just looking at that with my raw eyes, doesn't really look that great. This is open market right now because it's a futures market. Um, but so the actual market opens tomorrow morning 9:30, and so we'll see how that ends up playing out. But futures at the moment look like it wants to reject or have a small pullback until then overnight. We'll see what happens. But it had a really nice run off the 0.618, and so yeah, we might get like a bull flag action into Tuesday. Usually, when there's data coming out that's quite important, like Jerome Powell speaking or CPI or something like that, the market usually sells off into it because it's uncertain what's going to happen. We don't know. Okay, is the data going to be worse than expected, better than expected? Is he going to come out and be really bearish like he was in his last speech, or is he going to come out and he's going to talk really bullish like he was every other speech he's had in the last 2-3 years? So the market really tanked quite hard after his Jackson Hole speech because he came out and he sort of just like muttered a little bit and under his breath was sounded like he was a little bit down and depressed. That was the vibe I got from him. Like there's going to be a lot of pain. The market's sort of like a little bit excited at the moment. Like he actually said there's going to be a lot of pain, so don't expect it to be over too quick, was sort of his message. Because basically, he came out as too bullish in his previous speech and the market launched really aggressively, and he didn't want the market to take off. I believe he was told he has to come out and be very bearish in his speech because the data was good this time. Previously, the data was always bad. He would balance out the bad data by being positive. And then we had good data, he was negative. So we might get good data again on Tuesday. So he might have to be negative again to make sure the market sells off and we don't go back to all-time high in the next couple of weeks, right? But it all comes down and you have to read how he actually talks, his attitude, because that affects the way that the trader is going to trade it, right? So those are things to watch out for on Tuesday for sure. I think it's going to be really important. And I think that will give us a really good indication of if this is actually going to be the accumulation range for Bitcoin, or if we're going to roll over and have to test, say, a 14K level or a 11.5 level, which if you've been following our previous videos, we've talked about a lot, but we'll cover them in a little bit after this as well, because they're key levels that, we just can pick out by eye, but also we're having a look at Roman's P block indicator before, and it was picking out some really important levels actually line up, which is usually the case as well with what we were looking at anyway. So Tuesday is going to be really important. Then on the 23rd, I'm pretty sure 23rd, 24th is FOMC. So we've got a massive couple of weeks coming up for the stock market. And those two meetings, pardon?
What date was that, the FOMC?
FOMC is the 23rd. Well, just let me go double check that. I've got it up. 1 second. Sorry, it's the 20th and the 21st. So the meeting is usually on the Wednesday, the 21st. Yeah, so that would be Wednesday, the 21st. Friday is the 23rd. So September 21st will be when they have the FOMC conference. They release all the, the data on what they're doing with interest rates. And that's going to have a big impact, guys, on the way that the market moves from here on out. And if, the market, if it's positive and Fed Chair Powell comes out and starts talking about, we're going to be probably pausing rates because inflation's coming down really nicely and we're getting much closer to that 2% range, and we might be pausing rates sooner than expected. The market probably is going to bottom, and it probably will be the bottom of the range for Bitcoin. Will have just come back and tested its previous all-time high of 20K, and that will have been the bottom, right? So I think really important month for market structure going forward to the rest of the year. Really important next 2 weeks, I should say. So what are you looking at the moment here, man?
We just had the weekly close come in, so let's have a quick suss of that, eh? I haven't actually looked at the market today. That's a strong pin.
Yeah, that 3 week looks
that's come
nice,
in.
Doesn't it?
The 3 weeks just closed today. So that's essentially has come down, wiped out the low just.
Yeah, it was a really nice SFP of that previous. It was almost like the second test, put in a wick, and it came down, took out that wick, and then reversed off it. And all these wicks through here that we're looking at, you can see they're all coming under the previous all-time high, but then closing above it as well. So I think that's really important to note as well. So that what that says to me is that every time, yes, price is coming below the previous all-time high of 20K, but it's never closing on any significant time frames below there. So there's big players accumulating in this area. It's sort of similar to when we had that reaccumulation in the middle of 2021, before we went on the second leg higher, that sort of like July, August. It sort of reminds me of that on the high time frame, just next to it. Yeah.
This one here.
And we had a lot of wicks below the key level. Yeah, through there, like a lot of wicks below the key level. And then, eventually it took off.
Massive demand. So it's all about those high time frame closes, right? Which is why I pay a lot of attention to like the monthly. That monthly we had come in suggested that we were trading and closing back above the low, while SFP in the top of this candle here. So essentially it's just neutral. So expect more sideways is all that said to me. So when we came down to those lows, because of that macro time frame heads up, I was looking for those sweep of those lows anyway, which is why I run this chart. Take this back out to the daily. This is my main chart that I pay attention to. And I always have the liquidity pockets that haven't been tapped with ticks, just to remind myself if when price comes down to those, there's a high chance of reversal. So in the same way that we just came up to this level today, was also the, if you were shorting in this period here, your invalidation point was above the wicks. So this morning that's taken that out. So a whole lot of liquidity was right here. I've taken that and I'll most likely throw that probably back down to this level. Which is just those daily order blocks from here and here. You can see price respects them. All right, so we're here again, expecting the same kind of rejection offer on the low time frame. We actually go have a look at it, how it rejected is precision, really. It takes it out, closes just below it, and then comes back down to our range.
Perfect, huh?
So at the moment, I think we're just more sideways there.
That's definitely a short entry, what we're looking at right now. If this closes like this on the 4 hour, and then also that 15-minute candle that we were looking at, if you're trading low time frame, which isn't really the best thing to do on a Sunday night, but if you see that sort of like type of setup, generally that's like your perfect entry candle. So we like have a strong pump into a key level, it goes into that key level and then comes back down and closes below it. If you're trading low time frame or any time frame and you see a setup like that, that's a really nice, easy short because you have really risk-defined stop because you just want to put your stop loss above the top of that wick. And then usually you want to go and look for your first trouble area, right? Which we've ruled that out. And what sort of risk to reward? What's your R on that?
It'd be
3.4.
3.4.
Pretty
That's highly
nice.
profitable.
Pretty nice trade. And
I
then
think
there's
the huge
also
kicker here. Hey,
there's also the second entry that some people try and look for, which would be price might try and come back up to like 22 or something like that, or like the top of the range here, that 21,900 level, and then get rejected from there. So that could be like your retest, and then sometimes people would look to reshort the second test of the range high after the SFP. So this is sort of like, your Wyckoff guys, this is your UTAD right now. And then some people will wait and then they'll short the second test of the range highs and then try and catch that rollover from there.
Yeah.
Yeah, I'm sort of in agreement. I think, this might have a little bit of a pullback leading into like, Monday, Tuesday. Then I'm sort of expecting it to be good news because I feel like, the price of commodities has come down so much. I mean, look at oil, for example, right? Oil came down and traded in like the $80 range. So I feel like they're probably across the board. The Fed's starting to feel a little bit of pressure. Elon Musk came out yesterday and said if the Fed hikes, they really risk deflation, right? So there's definitely like people are starting to smarten up that the Fed is behind the ball a little bit here and they could be over hiking, putting too much downside pressure on the market. So I sort of have the feeling that the bottom could be a little bit closer than most people are thinking because of politics. And the other thing as well to remember is that the midterm election often puts a bottom in the market after a sustained pullback. So very, very possible that the stock market could bottom over the next 2 months, in my opinion.
Yeah, definitely.
So if that is the case, then it very easily could be that we're currently in the key accumulation range for Bitcoin right now.
I agree. Like we look at it, we zoom out a wee bit and look at it. Even if we get a swing of the lows, which is always possible, right? I even expect it.
I would
So
love a swing of the low. It'd be great.
If we were to trade, maybe that's our range. Just make simplified this. If we keep ranging in here for maybe another few months, even we might have something like that at the end. If and when we get that, it will be horrible because you have to protect your own capital.
Mm-hmm.
So ideally, you're either hedged or you're already risked off before this plays out. But that entry, is awesome. It's amazing. It's easy money if and when this comes. A lot of altcoins. I actually did an altcoin scan the other day.
Yeah,
A lot of altcoins just did this on their BTC pair.
Oh, nice. I mean, that's the
So
dream entry, really. If we got that, that's like my perfect setup to enter, as much capital as possible for, the 4-year journey sort of trade.
yeah,
right?
exactly. Essentially, it looks like this. This is one of the trades I took. Go back and have a look at it. It's one of the altcoins. Essentially, this is where we are right now. Say Bitcoin, we're doing this crap. But
Mm-hmm.
sooner or later, you might end up with this huge spring. But if and when you get like a candle like this, which is swept the low, swept the wicks, closed back in the range, right? Like I was saying before on that, whereas weekly trading ranges and the 4-hour entries, that's a perfect entry, right? So it's pretty much, it's not free money, but it's a very high strike rate position. If you had a long stop below the range, back below the wick, and then just aim for even new highs altogether. Just have an invalidation point instead of a target.
100%. And that's a really nice candle there because obviously it's a reclaim of the range and it tests below the range, but it gets rejected breaking down, right? So there's so much information in that one little candle that I think probably to the naked eye from a lot of traders, they're not seeing it. So what you need to think about is if the market was going to roll over, it would have rejected there, right? That was the opportunity for the bears to force the market down, right? And so there's, like Rome's putting on the screen right now, there's trapped traders in the bottom of that wick because the bears are trying to push it down. So they're going to have orders in there. And there's also people that are probably going, oh, okay, market just got rejected here, and they sell their long, they get rid of their long. And so now then when it closes like that, they have to buy back in. And that's what pushes us to the top of the range and then breaking out the top of that range quite rapidly, because people are bears getting liquidated that tried to short it down. There's some other people that are closing their shorts. That's also putting upwards pressure on. And then there's people who close their longs that are now having to re-long. So you've got those three forces of the market all pushing, and then you get the rapid push up to the top of the range with those two sort of strong explosive candles. And then we get on top of the range, you flip the range high, and then that's the next opportunity to get in. That's what I was showing you guys before on my chart when we were looking at the 2014, 2015 candles on Bitcoin's entry range, right? You break out to the top of the range, and then you get that retest of the range high, especially on altcoins. I prefer to try and get into altcoins after they've broken out of their range high. They're either in a bull flag or they're retesting, rather than trying to buy them in their range, because I want to be more tilted with my capital more in Bitcoin at that point. But that's something we can talk about another time, sort of like portfolio structure and stuff like that for the coming bull run. Because typically you want to be more heavily weighted Bitcoin and then follow the Bitcoin dominance chart. You know, when, for example, Ethereum starts to take off against Bitcoin, a lot of the time you can sort of lead the altcoin market, and you can sort of see it coming on the dominance chart. But we'll have a look at that in a little bit.
Cool. I'm going to point out something to pay attention to. Because we're talking about level reclaims and ideally trying to find bottoms or how to find bottoms.
Mm-hmm.
When you get the reclaim like this, ideally you want to see volume come in afterwards.
Yep.
Which is a sign of strength, right? And below this wick and below all of this, there's a whole lot of people who are short or trapped. Right? They either sold down here or they went short down here. When shorts get stopped out, it forces buying pressure in the market. So you'll see that usually in these impulses to the upside. But we can also see when we got above this previous trading range it was in, there was a huge increase in volume in the shorting or selling here.
Yeah.
But there was no result, right?
There's no result.
It didn't break it back down between these levels. So it's a huge heads up. There's continuational behavior likely coming, right? Because it's held this level, and the people who sold it here, essentially, they did sell the top, but there was no reward, right? So now the price is going back up against them. They've already been taken out by this candle here. So this is continuational behavior. So we could maybe even see a pullback now that this has happened and head back up. Ideally, you want to see when you get those level reclaims, whether it's Bitcoin, stocks, or anything, you want to see volume come in, or essentially huge volume in this aspect right here. You want to see a lot of people be trapped. If there's no one trapped down here, if you've got this kind of volume candles happening while you're down here, this whole period, there's no one really trapped there, is there? Like there's not a lot of volume happening. A lot of people didn't sell. So when you see these huge influxes in volume, when you lose that, for me, that's a huge heads up. But if and when we reclaim this area here, especially if a candle looks as good as that one, easy money from that point onwards. For the most part, there's always risk involved.
100%.
All right. I think we're just going to bounce between the two daily demand and supply zones. So it's demand, that's supply, based on those daily candles.
Very nice.
A bit of it's the middle of the trading range that we're currently in as well, this midpoint here. So we're just going to,
we're sort of at midpoint. I'd like to see a little bit of a pullback to maybe like 2,900, and then, you know, we rally off there, a bit of a bull flag over the next couple of days. Then we push back up to range high. It'd be nice to sweep range high, you know, push up to like 25,600 or something like that, and then come back down to the lows again, sweep the lows, and then we take off for good. And that's probably going to be in October towards November, right?
Yeah,
which is actually, you know, when we're going to be in Bali for our annual getaway tour.
That's right. That's November, isn't it? That's cool.
November the 6th.
Marked on the chart. Remind myself. Where are we at? We're going to time that pretty well, I think. Yeah, it should be good. Bali. Awesome. It should be pretty good. Hopefully the bottom's around there. That'd be great.
Yeah, that'd be perfect. We get to buy the bottom with everyone. We're all sipping on cocktails in Bali, talking about the markets. So if anybody doesn't know, we have a getaway tour for 7 days. We're going to be in Bali, and basically we're going to be teaching everybody our market mastery course, plus a whole heap of new content that we've created. And yeah, we're really excited about that. The last one we did in 2019, we got some amazing results. A lot of guys that came, a few of them have quit their jobs and become full-time traders from it. So, you know, we hope to have similar results this time with the crew. And we had so much fun last time. We've been dying to go back and run the trip again, but unfortunately we had to cancel the last two because of COVID. But yeah, this one's going to be a great one. We're actually going to be in Ubud for this one, which is going to be really cool. We're going to be up in the jungle. We're going to go on like jungle walks each morning. There's a yoga session. We're going to own private chefs. We've got our own studio to run all the training sessions in. All the villas that we have their own private pools. It's going to be epic. We're going to do a waterfall day one day, riding around on ATVs. Roman will probably run off again and take everyone on a scooter squad tour like he did last time.
Little scooter gang. That was great.
That was awesome. But yeah, if you want
That
more
should be good.
information on that, feel free to hit us up on Discord or in the Facebook groups, and we can give you guys information on that.
Maybe throw a link in the description.
Yeah, we'll throw a
Easy to
link in the
find.
description to register your interest, and we'll
Details.
be able to contact you.
Yeah. The last time was actually really good.
Yeah, it was pretty sick.
Awesome. I've done a lot of refining since the last one as well. So I'm happy to share a lot of my new content with everyone.
Yeah, it's going to be great. I can't wait to cover it all off with everybody. Do you want to flick the chart back to me quickly, or are you about to show something?
Go for it. No, all good. Can you take over, or do I need to stop?
I think I'll take over. Whoops. Okay, so yeah, this is the Fed Reserve page if you guys want to get to it. So you can just go Federal Reserve, and you can go to the calendars and get up the information so you guys can look yourself. But yeah, September 21st. So yeah, this is the chart. This is my typical trading chart. Usually use it for like low time frame stuff as well. But this is the potential trading range that could end up being the bottom. So if this does end up being the bottom, I think the key thing to watch for, guys, is this downtrend line through here, obviously getting a breakout. Now, that's going to be really key this week, because if it does break out, we push back up to range highs, right? Let's just say we push back up to range high, 25K. Then usually a lot of time it likes to have a little bit of a sell-off and then take off after a breakout of a high time frame trend line like that, right? So we could see some sort of price action like that. And that, to me, let's have a look on the quick time frame for that. Ends up being 13th of October, 122 days. It's sort of a little bit premature, so we might even chop around for a bit longer than that, but we'll have to see how that ends up playing out. But I could see this rally pushing up to the range high, even potentially SFP, like something like that, which would be a really nice spot to hedge any positions that we've been adding throughout this period through here, right? To be hedged in case this does capitulate down, then you can take the short off at the bottom here and then ride it back up, right? That's a really good way to sort of play the market. And then if it does take out and you get stopped out, then you take a loss on whatever this gap is through here. And usually when you hedge as well, you don't hedge with your entire portfolio, right? Or your entire net worth. You just do a percentage. So maybe hedging a quarter, 50% or, 75% or 33% or something like that, right? So you're not freaking out in a bad mindset. Usually, like, accumulation is all about mindset as well. So you want to be putting in, if you are planning on accumulating through this range here, like, okay, I think this is the accumulation range for the 4-year cycle. You need to be thinking, okay, I'm going to, whatever I put in here, I'm going to be holding for, until the next halving, which is I'm pretty sure it's like May, or possibly could be even in March of 2024, right? And so we want to be holding till after the halving period, because if we go back and have a quick look at our previous halvings, right? I might get the halving chart up for that, actually. Let's have a quick load layout. Right, so we can have a look at the last halving, right? The previous one in 2016. So we had the accumulation range, reaccumulation range, then we had the halving, then we go into the really aggressive bull market, right? Same sort of thing here. We had the bear market, accumulation range through here that was a lot shorter than this one. Then we had quite a extended reaccumulation range, COVID dump, then the halving, then we went into the really aggressive run after that, right? And as you can see, the data mapping that I had in through here actually wasn't too far off getting us to the top. Maybe it needed to extend a little bit longer. I'm going to delete that, right? But we weren't really too far off from where, I had drawn all this in before we even went through this halving. I haven't touched it, right? So it wasn't too far off. And that was sort of like potential end of the bull run. It did obviously end a little bit sooner than potentially predicted, but that was going to be a multiplication of the previous bull runs, and then I can't remember the exact math that I used, but it was basically the average and then added on the extra period of time that this one extended from the previous one, and then I ended up with this one here. But you don't need to worry about that too much. So we could potentially be in accumulation, then we would expect reaccumulation, and then be pushing, potentially to try and break to the upside of this channel again. So that's the sort of mindset that you need to be in, that we're buying the bottom. We want to be holding till after the next halving, which is, going to be in 2024, around this period. So it's quite some time. We're potentially in this area through here at the moment. Our prices could be coming down to a lower area, right? So let's go have a quick look at that. I'm going to go to the weekly time frame. So if we end up rolling over from here, this could end up actually being the preliminary support, which is what we're looking at back here. So we could be in this phase right now, right? And then we roll over, have the big capitulation down to the next key level, right? And then we go through quite a long accumulation range, and we don't get moving until maybe even mid 2023. That is definitely a possibility that I think we can't ignore, and it's going to depend a lot on the stock market, right? What happens in the stock market? So that's definitely one that we need to be watching. So similar to what Roman just drew up before, this key level through here, we really need to see this 0.618 level hold. Oops. Right. And then a breakout of this downtrend line through here, right? So we want to see this sort of, maybe chop through here, and then this type of price action pushing back up. Maybe not that so aggressive, but we're just going to like the nice, consistent grind up. When the stock market's bullish, it just does this little chop sideways and up, chop sideways and up, chop sideways and up. That's what we want to see the market go back into, not these big, super strong, aggressive rallies and big dumps, right? That's bearish action. We want to see just a nice sideways grind up. So even less aggressive than this would be better, right? This sort of just grinds like this sideways, has a little bit of a breakout. Okay, and we're back on, right? That's what this type of price action that we want to see, that will let us know, okay, it's really time to start focusing on the potential for a Bitcoin accumulation bottom being put in at the moment, right? If the stock market rolls over from here, obviously, a lot of potential for that. Earnings are starting to take a little bit of a hit now. If that starts to become more of a problem, the Fed continues to hike really aggressively until they actually start to get CPI or PCE data coming back down into that 2% range. This could roll over and we go lower, right? Maybe back to the previous all-time high of the COVID lows at 3,400, or if we go below that, then Bitcoin most definitely is going to be coming back down to these other key levels. So one of the indicators that Roman's actually created over the last couple of years gives us these amazing levels, right, which we call P blocks, right? And they're basically like order blocks, which we've been teaching for a long time, but they're sort of like super order blocks, right? So we call them P blocks for power block, right? I'm pretty sure that's what it is, right?
Yeah.
The power blocks, right? So we had one up through here before the dump. And on the weekly time frame and the daily time frame, they're really strong levels to watch out for. And how price reacts off those levels is really important to watch as well. So at the moment, this P block here is holding quite nicely as support. So we want to see that continue to hold. If that drops, then where's the next obvious level, right? Down here at 11,400, right? Which is obviously the next key level as well. I think I have a chart with them all on. I'm not sure. Maybe I reset my computer and I lost them, but I can show you on this one. All right, we've got them drawn in here, right? So if we go to the monthly time frame, there's a really key level here at 14K, which is the monthly highest close. And you can see we came up and rejected off that level through here, right? So that's going to be a really important level. If this does break down, then I think we could end up getting the accumulation range in. So let's just say this is the preliminary support. This could come down. And then we could range like this for quite some time, right? Maybe into 2023, and then we take off from there. It probably won't be that long in time frames, but this is a monthly chart. So when you draw on it, time passes pretty quickly. The other key level, which lines up perfectly with Roman's P block, is this 11,500 level, right? We can see it's a multi-touch, right? 5 touches through that level. I think that has potential to be the bottom as well. So this 14K level, 11.5K, I think are the 2 levels to watch out for if this isn't currently the bottom that we're looking at right now. And one of the key things to watch out for is the trend line from all-time highs, right? If we do break through that, right? If we do break through that to the upside, that's going to be very telling that the market is moving back into potentially more upside, and this is the accumulation range. So this week I think is going to be really important because we've got really key technical levels, and obviously this big trend line that's going to be tested. And we've also got really strong fundamental things happening in the stock market and Jerome Powell and monetary policy issues, which obviously is going to give the fuel to the fire as well. Now, I don't want to get too far ahead of myself with world politics and stuff like that, but it does look like there is possibly potentially the Ukraine-Russia war might be starting to pack up a little bit soon. It looks like Russia potentially is starting to fold. They're giving up a fair amount of ground right now to the Ukrainian army. But you guys can go have a look. Roman thinks it might be a trap, but let's see what happens. I'm hoping that the end to the war comes sooner rather than later, because that will give a lot of relief to the market as well, because it's going to relieve a lot of inflationary pressure, because it's going to give us a lot more supply back anyway. The other thing as well to take note, and you guys can go and read Arthur's notes on this as well, is the issue going on with the US dollar. All right, so let's go and have a quick look at the DXY, which is potentially, I don't want to speak too early, but might be putting in a little bit of a top at the moment. It's pulling back after, a really nice bearish divergence on the daily and fake out above this range high, right? So if this pulls back, right, to range low through here, I think that's going to be really telling that, potentially the DXY is finished its very bullish run. And if it continues to push higher, it's just going to create even more problems for the EU and for the Japanese economy as well, right? Because they're having a lot of issues right now, printing heaps of bonds, printing heaps of capital to buy their own bonds. So the US potentially has to print soon to help them out, which would be, I think, part of fighting the war, because it's an economic war that we're in at the moment. So the Fed might have to print US dollars to bring the price of the USD down relative to other currencies around the world, which is part of their responsibilities being the world reserve currency. There's no mandate on it or anything like that, but they have that responsibility because they have to make sure the rest of the world's financial systems don't collapse, because if they collapse under their watch, then everybody's going to move to an alternate financial system and the US loses power, right? So it's definitely something that they're watching. They don't want the US dollar to take off too aggressively. So we could see some downwards pressure coming in on the DXY if they do decide to help out the EU and Japan, and even possibly the UK with their energy crisis and also their bond crisis that they have at the moment as well. So that's something to think about also, just the fundamentals side. Anything to add on any of those points, Roman?
No, all good there. All good there.
So yeah, basically, at the moment we've got this potential double bottom through here. We've talked about the lower key levels, we could end up ranging in, and we're sort of giving you guys a little bit of a structure on what to look for how these ranges play out, right? And I think the key thing to watch for as well is a fake out to the upside, a fake out back to the downside, right? And then a reclaim of that range. That would be sort of like the dream entry to get something like that, a nice big fake out of this level through here, but it may not come, right? Similar sort of price action that we had actually was back here. I'm just going to jump down to the daily time frame because it's a bit smoother to watch. So we put in like, a lot of chop in this range here, establish a range, faked out to the upside. You can see the SFP through here. So this is sort of what I was talking about before, guys. Would be a level that you probably want to cover. Just say you were entering through the bottom 50% of your range through here. Right, so let's say we did parallel channels. Whoops. Right, parallel channel. Right, through our range. And then, right, so we're buying in through here, right? If you get this type of candle, this one here, that's the sort of candle that you would want to be hedging your position on. If price continues to go up, okay, no problems. We take a little bit of a loss on our short, but we're hedging our exposure in case we come back down. But as we can see here, we put in some really nice swing failure patterns, this candle here. And then you can see here, right, if we line that candle up perfectly to the wick here, right, this does the other type of an SFP. I'm just going to delete this level through here. And this comes back down to a higher time frame macro fib chart as well, but that's for another time. The other type of swing failure pattern, which is you get the close below and then instantly the next close back. And it's quite a strong candle through here, which you have the other type of bottoming candle. So sometimes we have bottom candles which look like this with a really big wick down the bottom, and other times we have bottom candles that look like this, which is a bullish engulfing candle. So this is your pin bar reversal, right? This one here as well, and this is your bullish engulfing reversal candle as well. So both of those can put in a bottom, right? This one didn't SFP this level here, but it did SFP the range low. So those are the sort of things to watch out for of the current range that we're in, because that can easily happen, right? And that's the sort of, things that we've been talking to you guys about to watch out for, right? So maybe we come up, put in that SFP the range high, we get a nice hedge in here, come in, SFP that low, right? Either put in a candle that looks like this one here, with the big wick, right? That'd be the perfect sort of entry. Or we get the bullish engulfing like this one, and that would be a really nice potential for a bottom, and then we move up after that. Now, in terms of higher time frame stuff as well, we have to remember that level that I just deleted through here also, which is the 618 of the macro fib, right? That this through here is also an entire range as well. Whoops. Right. Let's get a fresh chart up because it's a little bit hard to see. I'm just going to test one. Okay, so in terms of potential for the higher time frame of what to watch for, if you don't want to try and get in on this accumulation range, or you're a little bit more cautious about trying to get in lower, I think you also need to have points at where you go, okay, I don't think that this is the accumulation range. I'm going to wait for 11.5K, right? I think you have to have an invalidation level to buy back in at to say, okay, I'm wrong. Price isn't going to come back down to 11K anymore. And I think the level that you sort of have to admit to yourself, if you are a little bit more bearish, or maybe it's not that you're bearish, you just want to buy lower, right? So you can accumulate more Bitcoin for the next cycle, which is totally fine. And I would love to buy at 11.5 or 14K. Don't get me wrong, but the potential is that that opportunity might not come, right? There's a really key level at the bottom of this wick as well through here, right? I think cannot be ignored as well as a really key level for short entries, SFPs as well. But also if price flips that, right, and we get back above it, potential to possibly get long off that. If you don't like that level, that's totally fine as well. But this channel through here, I think, is a massive reaccumulation range. And if price comes back into that, right, This is just the deviation above, and this is just the deviation below. Yes, it's a big deviation. Don't get me wrong. But it definitely has potential. And this is the sort of stuff that we were looking on the lower time frames on Roman's screen just before, when you have the sell-off capitulation, everyone panic sells below here. And then, you come back up, you reclaim that range. And that's where I think is the sort of the do or die level that any sort of bearish bias you have, I think has to be flipped bullish if we get back above this 29K level. What do you think of that, Roman?
Yeah, I agree completely. And then you've got an easy invalidation point as well. So if you do enter on that retest, your invalidation is now below that as well. So even if it comes in and then fakes out inside that and then comes back below, because if you look just to the left, that little section right there, the very high point of that, if you draw a horizontal line across that to where your current, like to where your arrow is, bring it down a little bit. Yeah. So you got that level. Now, if you go in on and zoom into the 4 hour and look what price just did on the 4 hour, that same logic to where we just swept, right?
Yep.
So if you look to your left a little bit, there's that red wick and green wick right there. Yeah, right there. So essentially what we've just done right now is come back into that area and now getting rejected. So you can see that kind of price action as well. So it's not as simple as just price gets in here, we're good. You got to look for the characteristics that are happening while it's doing it as well. This is a nice 4 hour coming in. This is going to be a nice short, ideally.
Yeah, definitely. Good spot to cover here, I think, going into the CPI meeting Tuesday morning for sure. Because, there's definitely a strong chance this bleeds out a little bit. I mean, if it was just going to be focusing on this range only alone here, come back to retest this and then potential to bounce off that. Or if it just comes back into this range, it's not going to look that great. I'd like to see it hold here and bounce off that. We can also get fibs out and have a look there. So this is going to be the 50 level, and this is going to be 618. So when you see price action like this, which we sort of got a lot of this type of PA in the previous bottom as well, where you'd have like these big sell off, when you just to get BARTs, right? So you have to have BART after BART after BART. And one of the big tells would be, okay, so this is sort of like a range, right? Before we broke down. And then to watch what price would do above the breakout point, right? So if it can hold above this breakout point, which funnily enough is actually going to be the 0.618 level, then we would usually expect it to be bullish and continue to the upside. And if they would come back below this breakout point, and chop sideways along there, then we would be expecting it to go down. And that was pretty much how it played out for most of the bottom. And Bitcoin tends to do that a fair bit in its low liquidity times. But I don't know. These days, the market is different. So we'll have to see how that plays out. But if it can hold above this range here, obviously we have to think it's going to be moving to the upside. If we reclaim this range and definitely lose this level here, which is the 0.618, which is sort of what needs to hold to be required to stay in an uptrend. That's why I was talking about on the stock market as well back here, right? I want to see this 0.618 level and this key weekly level here hold, right? This is such a beautiful level, which is why if, you've been following us in Discord or Facebook, we were talking about this level because it's a multiple touch level through here, right? 4 touch, 5 touch level, right? This is a 6 touch. This comes back here. You want to see it hold. Lose that level, I think, we're looking obviously for back down here, and that gives massive potential for Bitcoin to roll over and retest that 18, 17K level, right? So yeah, any other thoughts, mate, on picking bottoms?
Can I grab a screen off here?
Sure.
Sweet. I'll share something that's got my interest this week because it's just come in really. This is the CME chart. The CME chart is futures, institutional futures essentially. And you can see we come under that P, bounced off it like you were mentioning before. But on the CME chart, we've actually SFP the lowest low from the previous swing.
Perfect. Yeah.
It closed back above with a Morningstar type reversal. It's quite an interesting setup.
We didn't have the selling climax because it was on a weekend. So the selling climax on the other charts are 24/7 is not on the CME chart. So there's something to watch out for as well, guys, because the institutional traders generally, they don't trade that much on the weekend. So they weren't panic selling or getting caught in that big wick that we had on, the spot charts that are on like Binance and Coinbase and stuff like that are open on the weekends.
Yeah, exactly. And what this has done is actually created divergence. by having that set up, right? So it's actually a really nice setup. So that impulse we got was huge. So we had that weekly P level with divergence into this level to hold it, and then further divergence with that falling wedge type structure. So I think as long as we're in this range, just trade the if this then that of the range, which is just while you're in the highs, look for reactions or pretty much this type of behavior off it, right? So this is those P candles, but on the 4 hour. Here's one here, came back up, rejected it, come back down to the low of that weekly one, just created one actually as well. So we're just playing ping pong, I think, essentially. Just got to keep reacting. If you're trying to accumulate anyway, or if you're looking to buy and you haven't brought yet, just be patient. I think there's plenty of time.
It was such a perfect SFP of the bottom of the range, wasn't it?
This was here. Yeah,
it's like your perfect entry pin bar candle on the 4 hour. Like it's a dream entry candle. I stopped paying attention, to be honest. I was like, fuck this market. It's dead to me at the moment. I'm gonna wait until it starts to look like it's gonna break out of this falling wedge. But on this chart, especially, that wick through there was perfect for the whole range low.
Yeah.
On other charts, it didn't go completely to the range low because obviously we had that extended wick over the weekend.
Yeah. So this is when I was talking earlier about how I grab bottoms. Like I got the range, so we got that weekly P down here that we had on before.
Mm-hmm.
When we come down to it, I'm looking for that usually 4 hour price time frame anyway, of deviations below previous lows or those key structural levels. And when you get this type of price action, especially with the reclaim here, usually get this kind of reaction to the outside. So every time you come down to the range low, just look for that. It's not that easy to pick while it's happening live. But essentially, it's refusing to go lower with these wicks, then comes lower, sweeps all the people here, closes back above. So essentially, these little wicks down the bottom here, we go and draw this in. All right, all those wicks there are essentially a range in itself on a really low time frame as well. So this is essentially a deviation of this little range. When it closes back in above like that, it's pretty much saying that it's ready to reverse, and you'll see that reaction to the upside. That's why these SFPs are so powerful. The lower time frame you go, you'll start to see more and more of these ranges, but on a really low time frame for right here. When it finally drops, this moment wick here is essentially just a 5-minute version of this, right? So this wick here is just this price action on a really low time frame. So when you see that accumulative stuff happen on the low time frame, so we can drop down to like the 30-minute even and pay attention, right? You see divergence building into it. Finally closes below, get a bit of a heads up that it's time to pay attention. Level reclaim here. So you can, I'm not saying go become degen 5-minute or 30-minute traders, but this is how simple a bottom can be sometimes if you've got those key levels defined prior to getting to them. I've spent the last, I think, 5 years now perfecting these. I think I'll teach people how to do this properly in Bali if you come along to that.
100%.
There's a bit of a knack to it, but I'm pretty good at it now.
100%, man. For sure. Loving it.
Other than that, I think we're just sideways, eh? Like just be sideways until it's not.
Yeah, definitely. And then, so let's just say this isn't the bottom range that we're in at the moment. Yep. What sort of levels are you looking for then? Same as me, that 14K level, or?
So yeah, what I usually do is let's go get a normal chart. So go BTC USD. We'll go Coinbase, a very vanilla chart. Get rid of this indicator. So this is the P block. Definitely a key level. We can see price has been respecting the hell out of this the entire time, right? Definitely a really key zone. It's quite a large zone. It's about a $4,000 gap, or $2,000 gap, sorry. But I try to cross-reference volume as well, right? Because you can't have price without volume. It's the other half of the story. So we can pay attention to where volume is on the chart. And from here, we saw time and price being spent here, right? There's 1, 2, 3, 4 candles in a row that all closed around this point. So there's more time and price spent here. So the volume adds up as a point. So when we came down to this point, it was a really obvious area to put divergence into it. So I love my divergence, which also just happened to be the all-time high as well, right? So the reason we spent time and price here was probably because of this, right? We consolidated underneath it before we pushed up.
100%.
So when we come back to it, it's definitely a level of respect. So with that same logic, if we look at this chart here, I think that is the key level, which is about 11.5. This is where the most volume, time, and price is spent, right, through here, essentially. So if we were to cross-reference, say, this candle here in particular, and look at the volume on that, right, and this period here. So if we were to fall, I think this is going to be a quick move down, the same way that was a quick move up, the same way this was a quick move down, and then rejected here.
It's a big gap, right? They
It's a
haven't
really big
spent
gap.
much time in there. And you can see
Yeah.
that on the VPVR as well.
Yeah. So with this here, there's no time and price here. The same reason we shot up here is the same reason we shot down here, right? So there was no real time and price spent here. It was just surging up. So if you surge up and there's not much time spent here, you surge back down as well. So if and when we do lose this, and maybe this becomes just a descending triangle, maybe much like this here, right? Maybe we just do something like this, and then we're coming down to that level. This is pretty much just 11.5 is where I'm interested in. So if we were to draw that 11.5 on this chart,
and it's almost a 50% dump as well, which would be exactly the same as that descending triangle.
yeah, it brings us down to here, this point in time, which is equivalent to the previous bottoms, right? So if we go into that descending triangle, let's say for instance we grab this particular descending triangle here just for the sake of it. Let's throw it over top of that, right? So we're essentially here right now. Everyone's excited again, and they were all excited back here as well.
Definitely.
So we could definitely just see the stale behavior come in. Essentially, that would bring us to trend, and then we just fall off, which is essentially what happened over here as well. So I just try to stay as methodical as possible and let the chart do the talking. If and when we start breaking above, if we break this down to ranges, for instance, this is essentially just a range, and I treat it as a range. When we get to the lows, I risk on. When we get to the highs, I essentially risk off or hedge if there's characteristics to say be cautious. Right, so that's a range in itself, which is between the all-time high and that last swing point of this wick, right, the capitulation wick. And essentially this entire range here was just a bearish retest of this higher range. So while we're in this little mid zone, right, this is essentially a void. This is no real direction. This is where a lot of people will get wrecked. Like Kyle was mentioning before, if we can get back into this and prove we're strong above it, ideally with volume into it, and then either large volume and we don't lose it. So we'll see a huge, like a bearish candle like this, trying to break us back down, but we don't lose the level. That'd be a huge heads up that we're strong. Or if we go through with no volume, to be quite cautious until we actually start trending back above whatever high we came into of it. Because essentially these are just ranges, like Kyle mentioned before. This whole thing up here is a big range. Now this little guy down here is a range as well. And the market tends to do these accumulation to reaccumulation to distribution to just maybe a slow time frame distribution into a redistribution into potentially accumulation, right? So we could be in accumulation right now for sure, and you'd be right to say so if we go up like this. But we may go straight into a distribution here and then roll back down to a new accumulation here, right? So it's all context. And then in the high time frame, if you're a large whale who only trades on the monthly time frame, this entire thing was just reaccumulation for you as well. So it's all about that context, right?
Definitely.
So right now we haven't achieved anything. All time frames are down. The 4-hour and the daily are attempting to reverse. All right, so we've got a 4-hour swing high. We've got new highs. Market structure's been broken to the upside, but we don't have a trend yet. On the daily, right, this is just a swing high. We've broken market structure, but there's no trend yet. So it's all good and well, but essentially this could have just been a liquidity grab, and this could very well just come and make new highs down here. Sorry, make new lows down here, right? There's no trend yet, so we need that high low coming in.
Yeah.
And where that comes in is critical.
That's the key to watch for, that higher low, which is the same thing, actually, guys. We're watching at the moment on the stock market, right? We're watching for that higher low, but on a much higher time frame to be put in to establish that uptrend. That's sort of what we want to see here on Bitcoin as well, right? That higher low get come in on that lower time frame, right? On the 4-hour, for example, you know, the 618 hold, then we break out of that little trend line Roman's got put through there, right? Push back up to 25K. You know, now we're looking a lot better.
Yeah. I think something that I've paid attention to, I've done a lot of pattern trading and quite well aware of them and what their intention is. So when you've got the head and shoulder, which is essentially this inverse head and shoulder or head and shoulders, this one's an accumulation version of it. When it's on a slope like this, on a downtrend, if it doesn't break out of that trend line here, usually you get a new low to this low, right? So in this case here, if this fails to break out in the coming week, I'd be expecting a new low down here. It might only just be to SFP this. We might end up finding that we get another inverse version of it down here. That's how the 2018 bottom actually happened. So we're going to pay attention to that. All right. Essentially, we had this reversal pattern, fails, and then comes down. All right. So you want to look for that failure because that failure is critical. And then if we go into the low time frame one more time here on the 4 hour, this is exactly what I was on about when it comes to the sloped version of it.
Man, everyone was losing their minds over that inverse head and shoulders.
So you got something like this, right? And then you fail to break out and you make a new low for this low. And then that's the actual low. If we press play, actually this turns us into a trading range. And we'll just draw that head and shoulder in anyway. So this is our swing, right? So trend is down. Let's clearly see we come from a high. This is a pullback against trend. So that's my range. So if and when I re-enter this, I'm excited, all right? We've got that inverse head and shoulder pattern playing out here as well. Rejected, made a new low. So now we're looking for reclaims. All right, so we reclaim this one. We reclaim this next one. So we were talking about earlier in the 2020, 2021, and 2022 top, the big double top. If and when we re-enter that, we want to see this type of price action. All right, so essentially that's the range. We're coming back into it. You want to see this. So selling into it and we don't lose it. Maybe a big bearish structure that doesn't lose that key level, right? Then moving forward, that's your range to work with, right? Keeps it really simple. So just understanding that the structure of this meme pattern, the sloped version, could actually send us to new lows, but those new lows might not be to be concerned about. It's actually for accumulating. So you're looking for those structure again. So we were talking about the SFPs, right? Maybe in divergence, right? You get that reaction, and maybe you get a reclaim of that later. Right, that's how simple the bottom was in 2018. Essentially, just these level reclaims, and then from that point
There was a
onwards,
really
it's just
big daily divergence on it as well.
down here, yeah. So between here and here, huge divergence built, right? So if you can if you can get good at watching multiple time frames while understanding the context of each of them, right? So the 4 hour failed that structural pattern for reversal here to go for the upside, but then set up for daily divergence, which then became a bit of a falling wedge, right? And then we get that same breakout we just had. The key really is that we didn't lose this low swing point here, right? Then across more. So after that falling wedge breakout like we've just had, essentially we're here right now, right? But that falling wedge, after having the selling climax low, I'm not saying we're going to go into this market, but at the same time we've just had this exact same behavior here, this wedging behavior into that key previous lows, and we broke out off it. So we'll see how this goes in the next week or so. But until we're actually breaking out to these new highs with volume, then I'm not too interested in upside. I'm more interested in just having that sideways mindset and let the market do the proving. Just stay as logical as possible.
100%. And so like the 30K level at the moment is very similar, I think, to say the 6K level that we had back then.
Let's go 30. Go 6K.
Or 29, 30K is similar.
Yeah.
So it's like, once we sort of reclaimed that level, it was very hard for anyone to stay bearish.
Yeah, if you were bearish right past this point, right, you weren't going to make it.
Yeah.
If you look at it like this, actually, you were talking earlier about how the accumulation could take a long time, that deviation.
Mm-hmm.
If we reclaim, it's great. It's that same logic right here, right? So if we take that, where is it? The forecast, I think this one. No, that's not it. Wrong tool. This one. If you do that same behavior, right? Essentially, that's what the last market cycle did in the same manner. That was just a trading range as well. I'd say that was the range. These are deviations of the range, right? So essentially, we're just doing that same behavior here until proven otherwise. So if we start breaking down further, then we need to update our logic and be like, okay, no, we are going lower. But with this SFP coming in, if this closes on the daily like that, I'm going to be hoping, ideally, to see a sweep of these lows, which then puts us into a bit of a descending pattern until proven otherwise as well. That's a lower high coming in again.
See how this range ends up playing out. I think we've given the guys a lot of things to watch for that could be potentially bullish or bearish for this range to play out. And obviously, if this ends up turning into a descending triangle type structure, then yeah, I think that, and we start getting bearish news from the Fed and bearish news from the stock market, then the potential to roll over, and we just look for those lower targets. We look for the new accumulation range at the lower targets.
That's it. But right now, all is well, yeah. I think something to pay attention to as well. I pay a lot of attention to these days, to RSI. We can pay attention to the highs that come in.
I think RSI is honestly the best indicator.
It's really underrated for the people, for people who think they know it, but it's actually a very, very strong tool if you actually take the time to understand it. So when these highs came in, and we hit those SFPs through here, which is bearishly retesting previous structure, the RSI was actually making a higher high, while the price was making a lower low. So this is called hidden bearish divergence. So there's a bit of a heads up that this was probably going to be the top of this rally anyway. Then we'll see where we end up after that, which we came down and made a lower low candle body to this structure here, or on CME we actually made a lower low altogether. And now we're getting bullish divergence. So now we've got the inverse of this. So this is how markets attempt to reverse. They go from hidden bearish into then bullish, and then you usually go for a range and then head up, right? So at this stage right now, the RSI is saying sideways until proven otherwise. In this rally we've just had, we can just pay attention to that same logic. So we've now got a candle body higher. We haven't closed here, so we haven't locked in anything. And the RSI is actually lower. So this is not bad, right? This is not bad at all. If the RSI was higher, wait on, let me make this up. Coming back, that was high. Yeah. So this is healthy behavior right now. This is not bad behavior right now. RSI is usually quite telling. So if you make these highs and the RSI is making the high while it's lower to the previous high in relativeness, right? It's a huge heads up. It's a very weak rally.
I think this
right
is
now,
the intermediate rally. Like this is just the intermediate, like a little local top here. You can see back on, I think it was around like the 17th of July, we sort of had that SFP almost in exactly the same spot. It was like the second rally inside the range. Back down, next top, or just across.
Right, yeah, this one.
Yeah. See, we're almost putting an SFP for the mid range, almost exactly the same price, right?
Yeah, exactly. The way I look at this is a lot of people, we were all talking about this rally back then, and that structure was this inverse head and shoulder that was playing out, a triple bottom. However you want to look at this, on every different time frame, it looks different, but essentially it creates a range. So we go and grab this parallel channel tool, go from the lows, and we use the 50% line to here, right? So we're matching that up to here. So essentially the inverse head and shoulder, or the triple bottom, or whatever you want to call this, creates a range in itself. So that's a range. And if we look where we topped and SFP'd at, was actually the high of that second one-to-one of that, right? So moving forward, that's our range essentially. We've now got two ranges. So we could actually turn this into a range here as well. Now turn this into a range. And then we can just if this, then that based on these levels moving forward, right? So if we reject here, which would just be bearish retest of this, come back to this level. If we bounce off that, fantastic. If we lose this, aim for this level, and vice versa, right? So when you start seeing rejection of previous structure, order block at the halfway point of this range, because that's essentially what we've done, we've fallen back. You would look at it in different ways like this. We've got one range and two range. When we fall back into this, we got stuck in here, right? We couldn't get back out. And the same way you could say that this is in itself here as another range, right? So when we get stuck into it, we then fall force to the low, right? So this same behavior here, it was created essentially by this structure originally. That's the swing against trend. We got stuck into it, capitulated to the middle point, right? Couldn't get above it, capitulated to the bottom point. Get divergence and SFP, straight back to the high. And we're just seeing this over and over. So we can stay really logical and systematic with that kind of approach to the market. And if and when we struggle here or we get back below, we can assume we come back to this 50%. If we can hold this, even with this candle here, if we still hold above it on the daily close, we could say that was a failure to break down. And we may end up just seeing price action, then head back up after that anyway to this point. So that's pretty much how I stay as systematic as possible when it comes to this range we're in. So we are in that intermediate rally right now. We're at the halfway point of that being the pullback against trend. And then I usually just one-to-one that. And that's usually where I'm looking for that rejection. right? And vice versa to the downside as well. So if we were to fall from this point onwards, right, I'd be looking for accumulation within this as well. But if you're not getting divergence down here, or you're not getting SFPs down here, and it's just looking more like this, then look for those new lows altogether, right?
Yeah, 100%. I think if we do enter that range, it'll be very telling. Like it's either going to nuke or it's going to hang around for a little while, then reclaim that sort of 18, or it's really 19K, right? Is the bottom, yeah.
Yeah.
So if we can trade below that and then reclaim it one more time, that I think will be very telling. It'd be similar to, back in this range, I think is a really good one to look at because it's more recent price action when, the SAMs are controlling the market, etc.
Yeah. Something that's interesting about this is we had that SFP, you mentioned it before, we had this perfect SFP that rally off that. Nice entry here. We come back and we fill in this gap here, and by doing so, we actually create divergence there. But essentially on a higher time frame, this is just an SFP as well. So it's all about those time frames because we go under the 4 hour and look at that same price action. All right. So there's a 4 hour SFP here, but if we go down to like the 5 minute, it might not be an SFP. It might actually be a small accumulation range down here. Or if you remember the 14K top that we traded, they had that small 5 minute head and shoulder at the very top of that big wick, and then it broke down. Like back in, I remember I think you nailed this trade. Where was it?
On the 5 minute.
Yeah, this guy here. So right up here with this perfect little reversal pattern at the very top of this. It was into a really key structural level as well. And then
Yeah,
the
there's a
market completely,
weekly order block up there from the 2017 top.
yeah. So that's
It's
the kind
our
of structure.
slideshow.
Yeah, that's right. That's in the market mastery slides. You've actually got the screenshot of it. Um, so looking for that kind of structure, if we just lagging my kill one moment. If we end up breaking down between this range down here, I'm looking for, even though they're a meme, they're a bit of a joke, but they have actual purpose, right? So these patterns, it's just a lower low, and a higher low. But it's usually a reclaim of the range because that's a range, right? So it's just simplifying stuff. So if we see either this happen, that'll be a deviation, that's fantastic. Or if we see this, right, below the range on a lower time frame, then I'm looking for that as a heads up that the market is attempting to spring here, essentially. So usually what we refer to those in the Wyckoff, right? So that little wick here on a low enough time frame might just be an inverse head and shoulder, right? We can drop all the way down to the low time frames.
Right.
And it's just a head and shoulder pattern here, right? So a bit of a meme, bit of a joke, but the way you look at it is just a low, a lower low, a higher low. Reclaim the range, right? And then boom, where you go. So you're looking for that kind of structure, especially if you've got RSI, like you mentioned before, a really underrated indicator. You're getting that divergence while creating this structure into that previous level back here, wherever it was from.
It's all
So that's
there.
kind of yeah, it's very simple, right? It's simplified, but you can really fine tune that to a systematic approach that is quite profitable, which is what I'll share in Bali.
100%, man. Looking forward to it. I might just grab the screen off you just quickly. I
Go
just
for
want
it,
to
man.
share with the guys a bit of a no-brainer sort of method as well they can use to just help them pick bottoms, which can be quite successful. So I'm just going to get rid of the regression trend. So everything else sort of taken out of the picture, guys. You can use the daily time frame and get these two indicators, which is just simple EMA, so exponential moving average. And so you just want to set it to 12 and always have it on close, and then EMA 21, right? So the 21 is the yellow and the 12 is the blue line here, right? And these can be really good. The crossover is what you're looking for, right? So when we get the crossover, these can be a really good indication that the market is actually getting ready to reverse and go into a bit more of a sustained uptrend or downtrend. So you can see when the blue line, which is the 12 line, so that's going to be closer to the price, and the yellow line is going to be lagging a little bit more. So when the blue line is below the yellow line, you don't want to be in the market. You want to be out. When the yellow line So when the blue line is above the yellow line, that's when you want to be entering and getting back into the market. As you can see, we're about to get a daily crossover just here. Back here, we sort of got the entry on, you could say on this candle or, just before it, right? Was sort of like the timing if you were going to buy here, right? Would be similar buying around somewhere through here. And price sort of chopped sideways a little bit. Maybe wasn't the best entry. You still got about 9% to the top if then you took the exit on these SFPs and, the rejection obviously off the bearish retest here, right? So not the worst entry, not the greatest for that one either, right? And obviously we've come back down to retest the range. So this could be potentially the crossover that then leads us out of the range is something to think about as well. But you can see previously the crossover here, right, got you out of the market or a short entry on this candle here, right, got you out of the market. And that's a 50%, $20,000 gap in between that until you got the next entry. So that's just something to think about, right? It can give a couple of false indications when we're chopping sideways right through here. That was quite an extended range. There are a few not so great through here, but they're very minimal crossovers. They usually only crossovers once the market is actually reverse trend, right? So in the previous bottom, on the last bottom we had before quite a nice rally, it gave you the exit. First one was here. We got a small crossover and then rejection through here, right? So we can take it from either this candle here if you wanted to, or this candle here, sort of the same price anyway, right? And then the crossover wasn't until this. So you had 30% to the downside. So it's a really good one to tell you get out of the market as well. But you can see the crossover after we finally bottomed through here, right? Until the next crossover, so through here until it tells us to get out, right, through this candle. So it's a nice 30%, $10,600 gain, right? And then the next crossover was here, right, until the market ended up topping out. And then the next sell-off crossover again was back here, right? So that's another, if you want to say the bottom of that candle, right, that's still a 19%. If you ended up getting out, on the SFPs through here, there's potential 15K, 32% trade there, right? So it's a pretty solid indicator to help you pick bottoms. If you just want to be like, I just want a black and white, am I in or am I out, right? Let's give us another shot back here for the cycle bottom. Obviously, a big sell-off into here. We had a crossover here, bit of a fake out, not really the best entry. Then the next crossover was here, right? So you probably took a little bit of a loss on this one because the crossover would have been here, your entry candle, potentially, and it got you to buy the top, and then you took a 10% loss on that, right? Then the next entry was the crossover here, right? And it didn't tell you, so crossover was about there. It didn't tell you to get out until here, which was 107, let's just say 170% move, right? So it's a pretty handy indicator. Obviously there can be a few false signals like every indicator, right? Even on pullbacks, right? When you get the crossover and break to the upside, it can be really good. It's helping confluence indication that market's getting ready to move back to the upside, right? Through here. That was obviously a really nice one as well, right? 73% move on that. Obviously, this one through here is going to be really nice. The chop through here, not the greatest though. So in really sideways markets, not the best, right? So this could end up being another false signal, and it just ends up rolling over, and you take a small loss on that. But so you're going to take maybe a few bad trades on it, but then the good trades have such big risk to reward payback on them that it ends up being, you end up being a long way ahead, right? And so that's just if you're sort of newer to trading and you want a black and white, really simple way to trade these markets, stick to the high time frames like the daily, just get the 12 and the 21 moving average. When you get the crossover to the upside, right, you want to be in the market. When you get crossover to the downside, you're out of the market. It can really be that simple, guys. It's just a really simple, no-brainer way that you don't have to analyze the market every single day, waiting for these wicks going each way, trying to read the stock market, understanding what Jerome Powell is going to do in his next speech. It's just completely no-brainering it. Just look and follow the lines, and you can be quite profitable over the next market cycle following that. So that's
Awesome.
pretty much it for me. Anything to add on that, Roman? I know you're a fan of moving averages.
We just had the 4 hour close. Um, um, if you want to check the 4 hour out, we just had the close come in. Could be worth showing because we were just expecting that, right? It's a decent amount of volume. It's a swing of those highs. It's looking like it'll
That's a
either go
definite shot.
sideways or it's a definite yeah.
It's a definite shot, right? 100%. But it could be a fake out. And you got to remember as well, it is Sunday night, 12 o'clock in the US, right? So anything can happen on a Sunday night. It's really important to see what the price does tomorrow. So we could get, pull back to this level through here, maybe. Right over the next 2 days, Jerome Powell comes out, sprinkles his magic on the market, and we start to push.
Oh, that would be great. Yeah. Have you been to the ticker much USDT.D?
No, I haven't. Do you want to take the screen and give us a
Okay.
look?
Yeah. Sweet. So there's a ticker. Do you know how you got Bitcoin dominance? This one's USDT.D dominance, right?
Oh,
So you
yeah,
can
the
see,
USD. Yep.
right, essentially, this can be a bit of a heads up too, right? So it's usually the inverse of Bitcoin somewhat,
Oh, that's nice.
right? So it's a really huge heads up that the market has swung the lows on both Bitcoin swinging the highs and the USDT swinging the lows. But we've also got this, right, which is divergent into it. So the US dollar is essentially diverging against Bitcoin, and it wants to swing high. So we could use that confluence now that this wants to swing high, and Bitcoin itself wants to have that swing low. So we don't have the divergence on Bitcoin, BTC or USD. We don't have divergence on Bitcoin here, but we do have divergence on the USDT.
Well, that's on
So
the
it's a bit of a heads
4 hour.
up.
That's a divergence because the price is making higher highs and it's making a lower high.
It could be, yeah.
We got the double top and then the lot and the.
And this one here as well. Yeah, so we got the divergence coming in here as well. That's 4 hour RSI divergence into a previous level here with the SFP and volume. So definitely an area of concern. It's a bit of a rising wedge. So this is a falling wedge. The way that you put that post up was great, right? And you have a little liquidity grab, SFP type behavior. Seeing the inverse of that right now here. Right, so this is a target of a falling wedge.
Yeah, it's definitely expected. This sort of behavior here is definitely expected, right? We've hit target one. We're seeing selling, right? Pullback is to be expected. Then you try and push to target two.
Yeah,
so I wouldn't be surprised if we pull back for a little bit and then it tries to push back up to 25K and then it rolls over again from there. That would make the most sense to me looking at the market.
Yeah. The way I'd review this is this what we're doing before, those trading ranges. So essentially, while we're up here, we're looking to defend this. If we lose that, quick trip to this, because it's quick trip here. If we bounce off that, fantastic, and reclaim that, fantastic. If we come back into this, we need to get strength and come back into that one. So just if this and that based on, right, these zones of or boxes, right? So over the years of trading, you've probably seen all the different people's approaches and all the books I've read and stuff. Like there's a box strategy, there's volume profile strategies, blah blah blah. Everyone's got the same approach. Sorry, everyone's got a different approach to the same price action.
Mm-hmm.
The way I look at this is just time and price, right? It's an area of quicksand. You get stuck in it. Once you're stuck in it, you're not doing this kind of price action. You're doing this kind of price action. So if and when we get stuck into this one, quicksand, we're just stuck here until proven otherwise, until you see deviation essentially. So maybe that's what we've just seen.
100%. So probably should wrap it up soon. Any final words, Matt?
Stay as systematic as possible. Do the boring, tedious task of actually backtesting whatever approach you do take to the market. A lot of people have their claims to the market and how they approach it. Actually go and do the work yourself and work out what does and does not work. It can be quite enlightening.
You have to do it yourself. Because if you listen, oh, Kyle said this or Troy said that, I mean, Roman said that, it's like, you're not going to be as confident when you see the setup. If you've seen that same setup by back testing it yourself 500 times, then you're going to be confident when you see it. So
yeah, exactly. It's about knowing having the inner logic of why it does it. There's that old saying about the the daughter who asks the mum why she cuts her meat in half before she puts it in the oven.
Hmm.
And the mum has no idea. And she's like, I don't know. This is what your grandma did. Call your grandma. And then they call the grandma and she's like, I don't know. Your great grandma taught me it. So call her. She's still alive, luckily. You call her and she's like, the reason we cut the meat in half was because our oven was only half the size of the current day one. So we actually had to cook half at a time. So for generations and generations, people had been doing dumb shit when in reality, right, and that's just that same logic, that same story plays out in technical analysis and trading. People have this assumption because someone said it that it's right, but they haven't gone and back tested it. So the person who said it may have heard it from the grandma and not the great grandma, you know? So always go and do the work yourself. Right now, if we close like this on the daily, that's horrible, right? Daily order block, same logic as this, like Kyle was mentioning before, at the mid range, same price action. Until proven otherwise, until we're above that, you assume we have that pullback.
And we've got to remember as well, this price action, when did the pump happen? Was it on Friday? It was a Friday pump, wasn't it?
9th of September.
Yeah, it was 9th of December.
Yeah,
yes,
Friday.
It was the Friday. I was thinking maybe it was the weekend, but I was like, no, actually it was the Friday because it went in unison with the stock market. So we have to remember, guys, that the stock market is ruling the market right now. So the 13th and the 21st of this month are going to be super important. It's pretty much back week after week. So we've got the Tuesday really important, and the next week, the Wednesday, even more important with FOMC. So how the market reacts to those two super crucial events and Jerome Powell's comments is going to be very telling for which way the market's going to move. If this is the bottom range we're in right now, or if we need to be looking for lower prices for the range to accumulate in.
I agree.
So, mate, gun to your head. Is this the bottom range, or do we need to be looking lower?
I'm too systematic. It's a hard one to answer gun to head.
Everyone wants to know, though. Gun to your head, you had to choose one or the other.
So, all right, you've got to approach this, and there's variables to answer here, right? So we've got the low here, and candle price. So that's price low. Are we in price low? Possibly. Ideally, I'd like to see a sweep of that and a reclaim of that. That'd be my heads up that bottom is in. But gun to head, is this the range low? The range low? I'm gonna say no. I don't know. Just because I'm so systematic, right? This chart here, I didn't make this just to the sake of it. Price has a really great way of FOMOing people into during distribution ranges in the same way it did up here.
Right.
So until we're actually trading back in that range that you pointed out earlier, I've got this mindset of sideways or bearish. Yeah, because every trend right now is down.
Yeah.
So until trends reverse.
So basically the answer is probably, but probably not. But then I can't really tell you until we get above 30K. If we get above 30K, then I'll tell you that the bottom's in. That's pretty much the way I'm thinking about it. That's the easiest way, right?
Yeah, just stay systematic. So we could very well do this and then do that, right? So it's all about constantly adapting to what comes in. So we could very well take people out here because that's what happened back here in the 2000 and this bottom, right? Just before this happened here.
Yeah.
It even happened here, right? So we did that same kind of price action, came back, took out that high, everyone got excited, and then you go and wipe everyone out.
Right.
So
that would be beautiful. That's what I want to see happen. I'd love.
Yeah, I want to see as many people wrecked as possible. Hopefully, the people listening paid attention.
You have to wreck everybody so we can move on.
Exactly. Gotta wash everyone out. I've actually just real quickly, I'll throw them up. This is a bit of a telltale sign I'm using at the moment on my Twitter. I put up a couple polls just recently, and it's good trading trivia, but right. So this particular one was about your stop loss and how much you're going to lose if your account if you get stopped out. If your stop loss was 5.5% away, right? C and D were the correct answers. They were both correct. The reason I had two correct answers was to try and really mindfuck people. The amount of wrong answers is decreasing at the moment when my trivia, and I use that as a sentiment gauge. Yeah. So if this was much higher, then I'd be like, there's still a lot of people to wash out, right? But they're getting smaller and smaller. So I got another one here, for instance. If your strike rate is only 33%, which means you only win 33 of your out of 100 trades, which isn't a bad thing because it's all about return, right? are you still profitable or break even essentially? And this again, most people have got it right. So what it's telling me is it's a sentiment check and like an IQ test, essentially sentiment test. Because if people are getting this wrong, that means there's still a lot of dumb money in the market,
Yeah.
right? The people who answered it, they knew what they're on about, over 50%. So it's a sentiment check essentially of intelligence and market knowledge. So because they're still getting, there's still a couple people wrong, but that's okay. There'll always be someone wrong. But there's not many people left to wash out. So it's just the traders and professionals left for the most part, or the people too stupid to sell, as they say. Which is not a bad thing either. Long-term holders, fantastic. We'll play to you guys.
100%, man. Once we wash everyone out, then the market can finally move up. Because, I mean, realistically, that's what they're trying to do. They're trying to wash as many people out so they can get their coins and then go up from that. I'm not going to bet that we're going to get another capitulation black swan event like that COVID dump, but who knows? It could come before the next bull run starts, or just before the next halving. I mean, realistically, that was only a few months before the halving. It was like perfect time to give everybody like that second opportunity that missed buying the 2019 bottom, right?
Yeah. One of the last things I'll just end on then is you can see when price moved up here very quickly, I left this gap in between, right? So there's a inconsistency here. There was a void essentially, right? So when this happened here, I was aware of it. I didn't really know the name of it. There's many different approaches to this, but we had that same gap exist where we came down to here, and that played a bit into my trading. So when we came into and filled this gap, for me it was very similar to this, right? So again, all-time high as well. But if we look down further, there's still one down here that hasn't been filled, right? So these ones have all been essentially traded back into, but this guy here hasn't. So there's definitely that 11.5 range there. If we do break down, and this maybe is just, right, time-wise, it's roughly the same as well. If we were to break down, then this is where I'm looking for. But until that happens, I'm assuming this is the bottom. All right.
Yep. I think that's pretty sound logic. And then if we get above 29K, then this like the bottom is getting locked in sort of level to watch, I think.
Essentially, yeah. And you can just work this out as a key level. If and when we get back up to here, you can even go higher. The candle bodies here on the weekly. So it's all about the context of the time frame as well. Sorry. So on this weekly time frame, we want to be seeing closes back up here, ideally, because this is a wick zone. It's all about context of time frame as well. So on the daily, that's very different, right? So that wick on the daily is actually just the wick on that weekly.
It's the range.
It's where the daily got stuck into. Yeah, look.
Right. So if we can,
it's all about context of daily time frame. So if the daily gets in here, fantastic. Quicksand, and then hopefully we go this way, not that way. But if we can get a daily close in here, and then maybe a weekly close in here, fantastic, right? Weekly close in here and not up here could be a sign of bearishness as well. Yeah. Because a weekly ideally needs to show strength and close back above the previous weekly highs.
100%. So that's it, guys. We're calling the bottom if price gets above it gets above 32K and can stay above 32K, then the bottom is in at this level. But obviously it can roll over, so we're very prepared for that, and hopefully giving you guys enough information on what to watch out for, and then how the market might actually trade in, say, a 11.5 to 16K accumulation range. That'd be a beauty of a range. So we'll be well aware of that and be looking to obviously accumulate in the lower 50% of that range. And then I think the breakout sort of confirmation that would be a bottom would be, say, a reclaim of the 20K level. I think would make it a bottom for being that. If we get a range, so I'll say it a little bit more clearly. If we get a range from 11.5 to say 16, and then we reclaim 20K, I think that would be confirmation of a bottom. But let's see how it plays out. So hopefully we're giving you guys some pretty nice confirmation levels, potential bottom areas, what to watch out for, and then also mapped out what this would look like if this actually is the bottom range of accumulation that we're currently in right now. Which, according to Sam Bateman-Fried's posts, I think he sort of feels like this is the bottom, but let's see how that plays out. The other thing as well to remember, guys, is bottoms are usually marked by big players going under, and the capitulation candle, we had the selling climax of this current bottom, there was actually two big players, Three Arrows Capital, who were pretty much, everyone thought was the smartest guys in the room, and one of the biggest hedge funds, crypto hedge funds in the world, borrowed money from absolutely everybody. They went bust in that capitulation dump, and so did Celsius, which is one of the biggest lending platforms, which is basically the equivalent of a bank in the normal financial system going under, right? So that's something to think about as well, and I think that's why the level's been getting defended so nicely at the moment. I would love to see that level get swept, so we get a nice wick below it, and then reclaim that 20K level again. So let's see how that plays. That would be my dream entry. So yeah, let's see how we end up playing moving forward. But hopefully we're giving you guys enough structure. If you've watched this far, please give us a like and subscribe. Obviously, we put a lot of time and effort. We've been on this call, I think, for almost 2 hours or something.
Oh, wow.
No one wants to see nobody watch their videos. So we love to see growth in the channel. That sort of gives us encouragement to make more content for you guys. So thanks a lot for tuning in. You can also find us on marketmastery.io if you want to check out our full trading course. Obviously, we're doing the Bali Trip getaway as well in November this year. So hit us up. We'll put info for that in the links below as well if you want more information on that. And you can also find Roman's indicator suite at
Profits, PROPHETS.VIP. Throw a link in the description if you want.
Yeah, we'll throw a link in description for that as well. Absolutely beautiful. So there it is, guys. You got pretty much 2 hours of content from us on how to pick the bottom. So you have no excuses if you miss it this time. Even if you do miss it, I think you have plenty of opportunity. 30K, it will be a nice level to buy in. If we end up pushing into the multi-hundreds after the next couple of halvings, 30K will still look like a nice entry. So don't sweat the small stuff too much on trying to pick the exact bottom down to the dollar, because no one's going to pick the exact dollar. It's always better to enter over multiple entries. And, let's just say we do break down from here. You're probably better off hedging and then taking it off when we get to 14K than trying to sell and then rebuy back in. But that's just the way I'm going to play it. So thanks a lot for tuning in, guys, and we'll see you all in the next episode.
Awesome. Thanks, guys.
And thanks a lot, Roman, for joining us, buddy. Missed you.
All good. All good.
We'll have to catch up again soon, and looking forward to seeing you in Bali.
Awesome, man. Appreciate it.
Thanks a lot,
Talk
guys.
soon,
See you soon.